Hey, this is Corey with Ruoff Mortgage. Hey, want to also talk to you guys a little bit about what's going on in our market. And this is probably going to be a pretty lengthy video, but what we're seeing here when it comes time to servicing of a mortgage loan and why we're seeing so many major impacts in the servicing with what we can and can't do, how we can lend, who we can lend on, etc. What's going on in a nutshell, and I'll try to simplify this. When the government came out and, of course, required everybody to work from home, that caused a lot of people to no longer receive a paycheck, which then means they're going to have a hard time paying their bills. So they've also mentioned that in doing so, if you are going to have trouble paying your mortgage or car payments or credit card payments or utilities, that simple fact would be just to pick up the phone and call your creditor and see if you could work something out with them. Well, I understand that times are difficult, but with that said, that basically places all of the burden on your creditor. And when it comes time for mortgages, here's what happens. We as Ruoff would originate your loan, which means that we do everything in-house. We fund the loan, meaning that we send the money to the title company disperses the funds, pays the seller, grabs your money, gives you a loan. We then are told what to do with that loan, and I don't want to say the majority, but that loan is then delivered to a servicing company. That servicing company then takes over the billing rights of the loan. From the servicing standpoint, and this is where it gets kind of complex, but the servicer and that loan is going to be backed by Fannie Mae, Freddie Mac, Ginnie Mae, and the servicers are under contract with the servicing of the loan. And the contract specifically states that if a person doesn't make their first mortgage payment, that mortgage payment then goes, or the mortgage loan then goes into default, which are huge penalties to that servicer. So let's fast forward a little bit and take into what's going on from the announcements and people doing forbearances. So we originate a loan, we sell it to a servicer, that individual loses their job. Now the individual can't make their first mortgage payment, so the creditor puts their loan into forbearance. Everything's fine. However, that servicer still has to make the mortgage payment. So it's a huge strain on our servicing industry at this moment on how can they accept a loan if they're not going to be getting the payments. Not only are they not getting the payments, but this loan is no longer going to be guaranteed by Fannie, Freddie, or Ginnie Mae, which basically puts more liability on these servicers. So what's happening in the industry right now is servicers are very strict on what they're going to lend on. For example, Indiana Housing, the state government bonds, down payment assistance programs, gone, vanished as of yesterday. They're no longer being offered. USDA lending is another government-backed. Minimum credit scores for those programs were around 640 2 weeks ago. 4 weeks ago, you could even get them done around a 620. Now they're at 660. Your FHA loans, where you could do a loan where an individual had a debt-to-income ratio over 50%, those are vanishing as well. And when you think about why? Because the servicers are just afraid right now because they don't have any guidance. Those loans that they could potentially be purchasing on a buyer 2 months ago where they had a 620 credit score, now they're requiring 640 credit scores. Why? Because the servicers think that if someone has a 620 credit score, they may be more apt to not be at work or drawing a paycheck, so they're going to have a harder time paying their mortgage payment, which means that the servicer is then going to have to make that mortgage payment when they're not getting it from the new homeowner. So huge shakeup going on right now, which is all temporary. So I don't want this to alarm anybody. It's going to be short-lived. With that said, everybody's still kind of waiting on guidance. We want, the government's come out and said, hey, let's do this, and the market reacts, or hey, let's go do that, and the market reacts. And I'll take it one step further. About a month ago, the Fed came out on a Sunday and said, hey, we're slashing we're slashing the Fed's fund rate to zero. Well, that was fantastic, but the Fed didn't tell everybody that that's not mortgage rates. So you see these news articles and the media that come out and they make an announcement. They're just not doing a good enough job at diving into the explanation of why they're doing it, what impact they're having, and what the result is from that impact. And they've made a lot of changes over the last 30 days that have been very, very beneficial on the surface, but the underlying issues that they've caused with the secondary market from a lender standpoint, from a servicing standpoint, from how does this affect the homeowner, how does it affect their qualifications, their credit, none of that stuff has been detailed and explained. Something happens, everybody reacts. So just know that right now we're seeing a lot of turbulent times. We're in uncharted territory, and until we get guidance, it's going to be kind of a day by day, hour by hour change or result, or sidestepping landmines to try to figure out what's still out there and what options there are. So with that said, of course, Ruoff, I can't be more blessed with the company that I work with Mark and Clint and Ryan and Amy as my branch manager. Man, we've got some serious rock stars at the top that are leading this company and really pushing through all the obstacles that we face on an hourly basis. So if you've got mortgage questions, qualification questions, whether I'm doing your loan or I've done your loan, or you've got just a general mortgage qualification question, maybe you're a real estate agent and have a question about a potential buyer that you're working with now, lean on me. I've been in the mortgage business for 20 years, 21 years. Yeah, I just showed my age. So does the gray hair. But with that said, that's what I'm here for. I want to be your resource. Put me in your back pocket. If you've got questions, I'd be more than happy to help walk you through that and let you know potentially what the outcome could be. So I'll put my phone number on this post, 317-439-4495. Again, Corey Drudge with Ruoff Mortgage, your mortgage advisor. Talk to you soon. Thanks. Bye.